Okay, great. Thanks. Okay, so my name is Derek Frey. I'm senior market or chief market strategist, excuse me, at Karnak Investment Advisors, and I will do a live look. Normally, I do a live look at the week ahead on Monday. I'm going to do it again on Monday, but this week I was traveling, so I couldn't do it on Monday, and so today's basically a makeup session. So I'm going to do both, of course, a live look at the markets and all that, but kind of open it up to whatever kind of discussion you guys want to have on what is an otherwise pretty freaky Friday. I've had some pretty interesting day trades that I can share. This is a good article, if any of you have a chance to read it. I'm a little biased, I must admit, because it's about me, but it's a good article. I mean, he did a good job writing it, I guess. So let me pull up some charts. Anybody have a particular pair they want to go through right away or go through first this morning? This is the euro pound. If we back out of it, you can see there's a kind of a perverted bullish bat pattern here, and it coincides with a very bullish, well, in this case bullish, a very bullish, and of course the Forex profit predictor has a very strong upslope in its forward-looking forecast. So, needless to say, I am long. Shocking as that might be. There's also a macro harmonic pattern here, AB equals CD, that still has yet to it started playing itself out, but it has yet to fully play itself out, which in my mind would be a move back up to about the 618 level, which would be about 85. This is a weekly, so it's going to take a few years, maybe a year or so for that to play out. But it is out there. And on a smaller level, on a daily, there's this bearish pattern that has now pretty much completed, at least in my opinion, its normal move. So, kind of interesting set of kind of successive, concurrent, even patterns on different time frames, even in different directions, but all playing themselves out almost simultaneously. Ski racing. Boyke. Okay. So, a couple of day trades that I had this morning. I went long the guppy right here, and I went long the euro yen right here. Both of them had a Hurst exponent that was very anti-persistent at the time. This is the euro yen on a 15-minute basis. And we had a forward-looking projection that was very positive, and we had a bullish crab pattern. So for me, that's kind of the perfect storm. And of course, I traded. I don't normally even trade Fridays, but this particular one I had to, because in both cases we had the same thing. This is a crab, that's a crab. And so anyway, I went long both, and I'll show you. I'm not making it up. Here they are. But anyway, because I'm already out of them, that's why I can't show you them live, because I'm already exited. But perfect example of the methodology that I use. I'm not trying to brag or whatever, anything. I'm just trying to use it as a textbook, happens to be textbook example. And so I didn't know what was coming next. I never do. I don't even pretend I care to know what's coming next. It's not important. I just know that when these things show up, that when the odds are good, I play. That's it. It's simple. And the odds are really good in this case. The risk reward was very good. My original stop on the euro yen was, it was 95.55. And then my original stop on the pound yen was, I think it was 62. Was it 62? I think it was 121.62. Yeah, it was 121.62. And then my original target was 122.62 on the target. So it was basically a 100-point bracket. It just worked out that way. It wasn't by design. It's circumstantial in this case. And I was going long. My average price going long, and that was 90. It was 121.90. So I was basically risking 30 or so points to make 70 or so points in both cases. So that's a perfect example of those playing out. Let's see what we have going on right now. I think for the rest of the day, the action's pretty dead. Europe's already closed up shop for the most part, right? You guys are all pretty much winding down, and it's time to hit the pubs if you're not already there. New York doesn't seem to have much in it as far as gas is concerned today, so I wouldn't look for too much follow through. We might get a little bit, but they'll try to turn it on here. But we'll see. It'll be tough. So, okay, what else? What other markets do you guys want to go through? Did the link not work? Did anybody try it? It should work. I just copied and pasted it, so. Oh yeah, somebody asked me Euro. You can see here the forecast is just kind of wobbly, as has been the market ever since the little pop there. Oh, and GY was asking what happened after 4 p.m. all pairs suddenly reversed. I didn't see any news coming out. That's a question I never ask. I have no idea what happened. I would never know what happened. I don't even have TV. No BS. I don't even have cable. I'm not even slightly interested in what's going on out there. That has nothing to do with what I'm doing in here. You know what I'm saying? So, whatever. That's kind of like background noise, as far as I'm concerned. I assume there must have been something. There's usually some sort of whatever kerfluffle that causes it, right? But you know, the way I'm doing it is purely mechanical, purely methodical, and it's just based on the numbers. So I have no idea. I assume there was some sort of an economic report, but I don't really know. Was there? It doesn't really matter. Whatever. For me, it's always, you know, the fact is that if there was a number or a report, this pattern was happening at the same time. Coincidence? Well, considering I've seen that now for the last, I don't know, 100,000 times at least in my life. You know what I mean? For me, it's obvious that the story may change, but the song remains the same. I don't know if that makes any sense, but it does to me. What do I use for the prediction? This is Forex Profit Predictor. This is, here, I can show you. It's this. I just have it on MT4. But here's the website version. I can run through all the pairs on this. Okay, Euro. So for the Forex Profit Predictor, this is really just looking forward through the rest of today. So it's for the short term at least. It's basically looking at low probability of extensive follow through. We may see it retest the upper highs that we saw, whatever it was, 123 and change there, 123.15 or whatever. But it doesn't look like it's really going to just go follow through in the very short term. It may, but probability is just not really there. Here you have the 60, the 120, and the 180, and you can see longer term the bounce that we're starting to see, that we did start to see last week, and then we had the pull, or 2 weeks ago, I guess, and then we had the pullback. No, it was last week, and then have the pullback basically all of this week. Now we're starting to see a new bounce within the bigger bounce. Like here, we can see it better, I guess, on the 180. And so if we're going to see follow through on it, you can see the 120 is kind of looking for it to at least get us back and retest where we were in the 124 handles, maybe by the end of next week. But in the longer term, if we look at the 180 cycles, you can see that they're flat and then ultimately breaking back down. So what it's really saying is range bound, where we've been stuck in a range from basically 122 to 124, give or take some change on either side, for the last couple of weeks at least. And there's little here showing us that we're going to bust out of that anytime soon. It's basically still a trader's market, which is perfect as far as I'm concerned. But game on. But for right here, right now, there was nothing that I'd go after in the euro. Euro pound, you can see longer term, it's starting to transition from that weakening cycle that it's been in for some time, ever since testing 80. And it's retesting the old lows basically that down here at 78 more or less. You can see the 60 is looking for some sort of a bounce to occur here, basically at the 78 handle, but it doesn't necessarily mean it's going to be a huge move. It's not necessarily looking for a move all the way back up to 80 or anything like that. Far from it, actually. Excuse me. Sorry. Short term, you can see 5 minutes just kind of chopping around. There's a strong upcycle bias on the 15 and a little bit of it on the 30, not nearly as strong as the 15, but it is looking to at least try to pull itself up back above the 78.50 handle, according to the 15 at least. So I would look for some kind of follow through on that by the end of the afternoon, but not much beyond that. Any sort of longer term follow through would have to be into next week. What's this? Sorry, I just saw the questions. Did the link work now? Do you often see a Gartley pattern before the news? Sam's asking. Hey, Sam. I wouldn't say. I wouldn't try to reverse engineer and start looking for news pattern. Like I wouldn't say exclusively, no, but it's uncanny and it's definitely beyond the realm of randomness that they are very often showing up, or at least in a piece of them is constructed. It may not always be the D point, but it could be the B point or the A or the C or some other point within the pattern structure. that it is made up during a major news release, yes. So, yeah, a lot of times they are part of it. But again, at the end of the day, it's kind of the forest and the trees, I guess. It's all that's wonderful and maybe interesting for some, but at the end of the day, I don't really care about any of that. If the numbers line up, then that's all I care about. I don't really try to make it. I'm honestly trying to strip as much art out of it as possible and make it all pure science, because almost every system seems to have some amount of quote unquote art left in it, and as great as that is, I'm trying to strip it out. There's no science to any of it? Okay, let's talk about that. That sounds like a good conversation. It's a Freaky Friday. Hit me. If it's not science, what is it? Is it all random? It's not? Okay. How is it not biology? That's funny. I'm actually reading a book about biology for the markets right now, but let's go. You are talking to the right person. If it's not a part of biology, what is it part of? Okay, I don't have time. Let's do this. Let's dance. All right. So, many of you have heard this before, so bear with me. But let me bring you up to speed. The market. Let me ask you a basic question. Will whatever the market is exist if man is extinct? Yes or no? Does it exist? I know it's a stupid question, but work with me. Obviously, if man is gone, markets are gone, right? They don't exist without man. They are a construct of man, right? What laws are man bound by? Man is bound by certain laws, and they are not religious. I'm not getting sidetracked. I'm proving my point. I'm anything but sidetracked. I'm dead on, baby. Bring it. It's not my opinion. None of this is my opinion. This is absolutely not my opinion. This is 100% fact. If you believe in in your next breath of fresh air, then this is not opinion. It's just fact. Man is bound by the laws of physics. If you don't believe me, open up your window and jump and prove me wrong. Prove that it's an opinion. Prove it. I'm waiting. Man is bound by the laws of physics. Period. You cannot break that. You might not like it. Clearly you don't. But you are bound by it. 100%. Unless you are the fifth element or the seventh sign seal holder, whatever. I don't know. Anyway, if we're dealing in the realm that matters, then you are bound by the laws of physics, period. So anything that we make, anything that man constructs, the market is only here because it's a piece of us. The market is nothing more than a reflection of man. That's it. It's not a big free-for-all. It's not some random bowl of blah, blah, blah. No. It is basically the distillation of man into a number, and our emotions into a number. It's very simple, actually. But anyway, the bottom line is, all of those things are bound by the laws of physics. That's it. Has nothing to do with religion. I love Jeebus too. Okay? Makes no difference. regardless. Okay, that has no bearing on any of this. What matters, though, is that you are bound by the laws of physics, and therefore whatever you construct is also bound by the laws of physics. Show me something that man has been able to build that breaks the laws of physics. Even the Hadron Collider, most powerful thing man has ever built on the planet, does not break the laws of physics. It proves them. Okay, so moving right along. That's all there is. That's why it is a science. It's that simple. I can't make it any simpler than that. That's it. Therefore, it's not a free-for-all. There are known laws of physics. There are known laws of science. Nothing just happens. So it's not a free-for-all. It is a science, and there's completely lots and lots of known laws and known variables. There's also infinite degrees of freedom, which is what makes it so much fun. It's never going to be absolutely able to be captured, just like you're never going to absolutely be able to capture a lot of things that have anything that has an infinite degrees of freedom, because infinity is not a big number. Infinity is not a number. Infinity is infinity. It's not math. It's an idea. It has nothing to do with numbers. People misunderstand what infinity is. So anyway, that's what makes it so much fun, because we have infinity built into the equation. It's a beautiful thing. Whoever made it all up, or whatever you want to believe made it all up, brilliant. Brilliant. Brilliant for them to add infinity into the equation. Makes it so much more fun. You're looking at them, aren't you? Well, that's your opinion, but I'm not giving you my opinion. I'm proving it's science. So this is a piece of science right here. This is the Hurst exponent, all right? This was invented by a hydrologist, not invented, discovered by a hydrologist in the late 1800s, early 1900s, when he was working on the Nile Dam project for the Queen of England. Had nothing to do with markets, has nothing to do with markets, never has had anything to do with markets, but I use it because it works in science. Thank you very much. That's how I validate everything that I do. My entire existence as 20 years as a trader has been validated on the premise that using things that were proven in other sciences is applicable to the market, because it is the same thing. Its underlying data source is nothing more than a nonlinear data source. And science has dealt with nonlinear data sources for a long time. It's not an unknown thing. So anyway, I know I'm passionate about this, by the way, because because the evidence that I have in front of me is ridiculously obvious. Makes it ridiculously obvious, you know? But I realize that it's not seen by everyone else. So, whatever. Yes, very much so. Absolutely. Do I know Pascal's pi for hydrology? I mean, honestly, no. Yeah, I mean, am I completely ignorant to it? It rings. I mean, all of that in pieces rings bells, but together, not a lot. But I haven't looked at the hydrology side of it in a long time. That was a decade ago when I discovered that this would work for what I needed it to do. So that's science. Somebody else asked if this is the Fourier transform. Absolutely, yes. This FOREX profit predictor is basically a Fourier transform on steroids. To make a very long story short, if the inventor heard me call it that, he'd kick me, because it's a gross oversimplification, but it's not overly incorrect either. It does rely heavily on the Fourier transform. Yes. Are we talking Star Trek now? And harmonic patterns are the patterns on the third level are all based on Fibonacci ratios, which is based and fractal structure therein. Fractal structure of Fibonacci ratios. So it's based on all science: fractals, Fibonacci, Fourier transform, and the Hurst exponent. But that's really just a way of expressing what's the larger piece of piece of math, which is measuring persistence. Excuse me. Persistence versus anti-persistence. This is an incredibly awesome nonlinear tool for nonlinear data. That's why I use it. The Hurst exponent is one of the few things that actually gives you a really deep insight into what's going on in your otherwise chaotic, infinitely variable data stream, otherwise known as the market. Seemingly infinite. It's not really infinite, because first of all, no market goes below zero. So that takes away infinity right there. But the variables that kind of seemingly come in and affect price are, at least I used the word about 27 times in the last sentence, but seemingly random. I mean, seemingly it's infinite. So anyway, don't misplace confidence with arrogance, by the way. And also don't misplace fact and opinion. None of what I said is an opinion. It's not my opinion. Man is bound by the laws of nature. Not an opinion. I can prove it. Anyone can prove it. So, the rest of the leap of faith that I took from that, not much. Yeah, I've got trading rooms. You can find them. Just Google me. I'm not a salesman, and I'm not whatever. There is trading rooms, but honestly, I don't know how much longer they're going to be in. I'm running my fund now, and I'm really much more focused on that than anything else, as one might imagine. What do you mean? Do you really seriously need me to prove that you're bound by the laws of physics? Come on now. There's nothing to email. Like I said, open up the window. I don't know what you want me to email. I mean, go take a basic physics class or something, or just Google physics and Wikipedia or something. I mean, you are bound by those laws. It's not religious. It's not, science is not a religion. Not at all. And it has nothing against religion either. Religion often has something against science, I would argue, but it's really not the other way around. Science doesn't give a damn. It's objective. Yeah, the fund's absolutely open. You can, it's a normal CTA fund, and I have to give you, of course, a disclosure doc and tons of other. There's about 17 trillion pieces of paper you're going to have to deal with, but thank you, NFA. Let's see. I'll give you the email address, and you can just email me, and I can send it all to you. I'll actually have someone else get in contact with you, because I do not. Should have made write this email a little longer. Yeah. There, that should work. Time dilution. Well, Nassim, I've been working on time for, um, uh, I don't know. I guess we must be on year 6 now, I think. I think I've been saying year 4 for 2 years now, so it must be at least 5 years. And, like working on it, I mean pretty seriously. Um, and currently, my research has gotten me into music and the different harmonics and things like that, and timing intervals within music and things like that. Yes, my love. Excuse me, one second. Duty calls. Okay, excuse me. So, anyway, time has really been an interesting thing, and do I understand it? No. I mean, have I heard of it? Have I read some papers on it? Yes. Would I say I understand it? No. Um, fully, at least. I mean, time is, oof, I don't know. Um, it's it's the hardest part. Two biggest things are time and magnitude. Magnitude is another thing that's been a bear to accurately, consistently forecast magnitude. But that's almost worse than time. Well, what I'm showing on the thing here is that the trades I already did this morning, these are the trades I did this morning based on my flawed science, if you want to see. There they are. I don't know what screen I'm broadcasting anymore. But I did euro yen and I did also this pound yen. I was just showing them here because I wanted to show that I wasn't making it up with hindsight, but I also can't show them live because I'm out of them. I'm flat now, at least those two. And anyway, so what this was I had a low. I'll explain the science behind it. What time is it? Yeah, I got time. Okay. The science behind both of them is the same, so it doesn't matter which example I use. It's 6 of one, half dozen of the other. In both cases, we had the same basic setup. I'll use the euro yen because it's when we started on, I guess, and I'll blow it up so it's a little bigger to see. Easier. Come on, come back. Go big. I gotta make it smaller so you can see it again. Alright. Alright, that's as good as size-wise. So, so this morning when I got up, first of all, I was short euro yen before I got long. So I covered my shorts, but I covered them up here. I covered them early on this first dip, and then we bounced and went much lower. When we moved lower, this pattern showed up. This is a bullish crab pattern. This is my favorite harmonic pattern. I hate to say that, but it is. It's very rare. It only occurs about 4% of the time in overall markets. But when it shows up, I don't mess around. I play it because it works like, I don't even want to say, like 75, 80, even more % of the time sometimes, depending on your sample size. But anyway, so I had this bullish crab pattern that shows up, and it's all based on science. It's all based on Fibonacci, successive grouping of harmonic Fibonacci ratios that are both fractally, that also incorporate some fractal spacing, without getting into it. Anyway, Also, that was, this was all happening at 3 or 4 in the morning. Yes, I did get up at 3 o'clock this morning, and which is actually quite normal for me. And at the same time, we had this red line down here, again, the Hurst exponent, the piece of hydrology, also nothing to do with markets, has to do with building dams. Actually, it doesn't have to do with building dams. It has to do with measuring the flow of water. It was telling me that things were very anti-persistent. It wasn't telling me that because it's down, the market should go up. It was telling me that the current data is no longer likely to continue. Basically, what the Hurst exponent does is it measures the feedback loop of any dynamical system. Okay, so any dynamical system has to have memory, right? Because dynamical means that the past influences the future, and everybody believes that the past influences the future in markets, right? You at least believe that. Yes? Past has some influence on the future? Can we agree on that? Or no? Yes? No? Maybe so? Anyone? This is the screen I had when I actually took the trade. The only difference is it's played out since then. This screen looked exactly the same. I mean, here I can push it over to the right, and it looked like this. There you go. Looked like this before I got in. Really? You don't believe that the past influences the future? Wow. So do you have a good trading track record? Because if you do, you're hired. All right, send it to me. Because I would love to have somebody on the other side. Like with me, I mean, though. Not against me. It'd be great. I'm serious. I'm not even messing around. Anyway. So here's what we had. I mean, I don't even know how to address that. But so if we do agree, if most of us at least agree that the past does influence the present, actually, not the future. The past influences the present and therefore has an effect on the future. Then there has to be a way to measure how much the past is affecting the present. And that's essentially what the Hurst exponent does. It measures how much the past is influencing the present, and therefore how much it's going to influence the future. So when we were way down here, the Hurst exponent was also way down here at 0.38, whatever. It doesn't, the raw number doesn't matter, but relative to recent history, it was very low, as you can see. And so that's very anti-persistent. What that means is the past is no longer positively influencing the present, but in fact it's now negatively influencing the present. So it's not only measuring the feedback loop, but it can measure the feedback loop and determine, is the feedback a positive feedback level or is it negative? In other words, is momentum going to continue or is momentum going to stop and possibly reverse? When the email that I typed in earlier, then when the Hurst exponent is very low, that's all it's saying. It's not saying the market's going to go up. The Hurst exponent can be very low when the market's very high. All it's saying, or even when the market's going sideways, all it's saying is whatever the heck has been happening recently is no longer likely to keep happening. It's not saying it's guaranteed to reverse. It's simply saying whatever's been happening is going to stop. Something else is going to happen. There's only 3 things that can happen, up, down, or nowhere. So it's going to be one of the other 2. That's it. So right then and there, you already have a statistical advantage just knowing that little piece. But then you marry it with some of this other stuff, and you can get your edge above 70%, which is what, my minimum threshold for taking a trade. But anyway, the projection at the time, and now I have to show what the projection showed because it showed what you're seeing now, basically, showed this huge upslope. So the Fourier transform piece of the science was the one thing that was not just looking at the past and the present, it's actually also looking into the future. And it was saying, well, in the future, the path of least resistance is higher. And you can clearly see it was down here when like I said, when I got in, and where it's gone. So it's not like it's, you know what I mean? Like it didn't work, or like I'm making it up, you know? The projection hasn't changed. The projection looked exactly the same, is what I'm trying to say, when it was down here as it does now. The only thing that changed is the white line. The green, blue, and red lines, which are the actual forward-looking projection, didn't change at all. Been the same the whole time. So that's 3 pieces of science, at least in my opinion. Again, it's not my opinion, because I didn't make any of this stuff up. I'm not that smart. I didn't invent the Hurst exponent. I could never do such a thing. I'm not some mathematics freaking freak show. I didn't invent Fourier transform, for the love of God. That's one of the most complicated pieces of mathematics anybody has yet to try to understand, let alone fractal geometry and fractal everything else. But I do know that it's all real science and that it all works, and it's all validated in almost every other scientific thing on or off the planet, in or out of the solar system, for that matter. So, based on empirical data that is, in my opinion, undeniable and whatever, I have little choice but to comply. If I did anything else, I would be violating the laws of probability, which I fundamentally can't do. Somehow. You want to look at predictions of the CAD? Sure. It's pretty dead. I had it up this morning and I took it down because it's so dead. It doesn't equal philosophy, it equals physics. Whoops. Gonna get me to trade by accident instead of It's not philosophy. Philosophy would be an opinion. None of that's an opinion. Like I said, it's all just basic science. I simply applied it to the markets. But it's all stuff that's been validated. I mean, the very fact that a cell phone works, you know the Fourier transform is real science. If you use a cell phone, you have little choice but to admit that it works, because it wouldn't work if the Fourier transform wasn't real, because that's how cell phone technology works. Cell phone technology is absolutely 100% dependent on the Fourier transform. And that is a piece of mathematics. So if you believe that cell phones are real, then you have to believe that the Fourier transform is real by extension. Whether you understand it or not is not my problem. But that's not philosophy. That's science. None of that's philosophy, none of that's opinion. I love this conversation, by the way. I hope nobody thinks that I'm arguing. It's great. I'm always asking for somebody to take the other side. So I've even had some of my friends come in and be shills just to take the other side. But this is not one of them that I know of, at least. This is just a fun, Freaky Friday. That's awesome. How deep is your sample size? By the way. What's your sample size? Oh, God save the euro. Yeah. It's definitely not going to take an act of God. It's going to take, I mean, the euro doesn't need saving, is really the reality. The euro is quite fine. and Greece will stay. So will everybody else. I mean, there is no alternative other than suicide. There never was. It was just fantasy. And I've said that all along. I'm just being consistent with what I've said in all of my webinars. Anybody who's been to these with me, I know there's a bunch of you here that are regulars. You can back me up. I've been saying it the whole time. The euro is fine. Nothing's wrong. I mean, no, that's not true. There are issues, but it is not going to fail or collapse or cease to exist or anything crazy like that. It's just going through some growing pain. They'll sort it out. As far as the other thing, the account, I don't know. That depends on your position and really your stop more than anything. Sorry, what else do we have here? Oh, you were taught to do calculus without a calculator? Oh. Oof. Ugly. I feel for you, buddy. Is fantasy a science? Boy, now we're getting into a good, really interesting conversation. If you would have hit me with that a few years ago, I would have said no. But recent research and data has begun to show otherwise. So I will have to say yes. Fantasy is a science. Euro yen. Oh wait, what does it say? Oh, I did. Yeah, thanks. I mean, I wasn't. Again, I'm not trying to show it for that reason. I'm not. It's not me. Okay. Like I'm not sitting here trying to say whatever. All I did was follow the rules that I use, that I've always used, that I've worked for a long time and will work for a lot longer than I'm around. That's it. I do anything. I'm not smart, special, any of that. I'm methodical. I'm consistent. I'm scientific. but I'm not. I certainly had no clue what was going on in the outside world or anything of it. I simply have a methodology that I follow that over time works. No, it doesn't work every day. There's plenty of days that it doesn't work. But over time, it works a heck of a lot more than it doesn't. And that's what matters. That's why I was asking about what your sample size is. Because like my sample size, when I say sample size, I mean how many real trades have you placed with your methodology? My sample size is over 100,000. So I know, and that's just in the last few years, actually, that are consistent with this final crystallized methodology. If I go back my whole history, it's many hundreds of thousands, but that's a different story. So like, I have a pretty good sample size. You know what I mean? Like that data series, 100,000 is pretty normalized now. You know what I'm saying? Like the statistics that we can get out of that is fairly reliable, much more so than if your sample size is 1,000, let's say. You know, if you only got 1,000 trades, that's a good start. There's nothing, that's great. Don't get me wrong. Everybody had to have 1,000 at some point. Most people never even get to 10, let alone 100, let alone 1,000, using the same methodology. But that doesn't, I'm not talking about the 90% that are never going to make it anyway. So we just sweep them aside. They're the ones that pay the way for the few of us who actually do the same thing over and over and over and over and over again over time and realize the actual net result of an edge, of a consistent edge, because that's all this is. At least for me. Again, I'm looking at it as science and as math. And I started out as a blackjack player, so that's how I came up. And blackjack, I assure you, is science. It's not fantasy. And it too is bound by the laws of physics. And some other laws too. Primarily Murphy's Law. But anyway. The course. Okay, sorry. I'm being a bad salesman because I'm not a salesman. I'm sorry. There is a course that we're going to be doing. I do a course with FX Groundworks. For those of you that are interested in the patterns, here, go to fxgroundworks.com. Some of you may remember I was working with them a few years ago, and now I am again. To make a long story short, there you go. And just get yourself signed up for more information from them, and the course will be announced in the next few, actually next week, to be specific, but I'm not exactly sure what day. But anyway, there will be a course starting in September sometime. It's the first one that we've done in a couple of years, so it should be fun. It should be a lot of fun. And let's see, what was the other question? Oh, the funds. You can just email me, like I said. What else? Well, I would love to sit down with anybody. I'm going to be in Vegas. I'm speaking at the FOREX Traders Expo on September, I think it's the 14th? Friday, whatever the Friday is. Let me look. Hold on, I got a calendar here. Friday, yeah, the 14th. And I'm not just speaking, I'm actually going to trade live. Yeah, Vegas, baby. Exactly. Telly Savalas. That's all I can think of when I think of Vegas. So yeah, I'll be there Friday, trading live. I think it starts right at noon. I mean, my thing starts right at noon. It's only for 1 hour, but they asked me to come again. I think it's the third or fourth year that I've been there. I've done a bunch of other ones too, not just Vegas, but I've been pretty consistent at Vegas. Anyway, so yeah, if anybody wants to meet there, I would love to hang out. I did do ITC a few years ago in '08. That was awesome. Got to meet a lot of people there. I still keep in contact with a number of the people that I met at ITC. That's another extremely good time. And yeah, anytime anybody's in Florida, let me know. It's a big state, but I'm always around. I got a lot of business partners and friends down in Miami, so I spend a lot of time down there and whatever. South Beach, baby. You have a place in Miami? Sweet. Where? I'm down. I actually haven't been down in a couple of months. I need to go. I think the last time I was there was when we went to Key West. I can't even remember. Anyway, went to Tampa last weekend though. Tampa's awesome. No, I think that you can be, cautiously aggressive right now. Like you've got a buying window over the next couple of years, probably 2-3 years. 2013 should be a pretty big slump because the market's going to take it. I mean, again, I'm not really speaking my opinion here. I'm speaking the work that I do, the probability, and I've already looked at all this. The market's expected over the longer haul here to take a pretty big dump into and through most of 13. So if that's the case, then that would drag real estate and everything else down with it, of course. And so you'll probably get a lower low, if you will. But we're at a low for sure. I mean, if you can, the question is your staying power, because buying now, it's not going to pay off next year. You know what I mean? Or in even 2 or 3. Buying now is going to still take 5 to really pay off, or 10. So, because you're really basically getting in right at the edge of that, and who knows how big the payoff is even going to be. It's most certainly, I shouldn't say that. It's highly unlikely that it will retest the old high. Possible, but not probable, at least at this time. So, so there's, again, I was saying earlier that trying to calculate magnitude is another thing that I'll pay green money to anybody who can do in a good way. Calculate future magnitude. forecast magnitude. That's one of my holy grails right now. But yeah, I mean, you should have another shot at picking off some low hanging fruit before this is all said and done. And I mean, and this is something that I've said since here on FX Street since 2007 or 8. You guys remember when all this started happening? I said back then we're going to go through. It's going to be a massive reset through 2013, and we're still seeing it play out. The market's kind of shrugged it off, but nothing else has, and the market's going to catch up to everything else, not the other way around. So anyway, again, I'm not trying to say I told you so. Again, it wasn't my opinion back then. It was simply the math. The math was simple. We had a massive influx of 5-year ARMs. Massive. Well, what's 2008 plus 5? 2013. It's taking until 2013 to purge the system of all those resets. At the end of 2013, we will have purged everything that had been written, all the BS paper that had been written in 6, 7, 8 will all be gone. Not gone, but will all have been reset. Whatever. And many of those will then go to foreclosure and whatever. I mean, it's not a happy story. It's not a happy ending, but that's the point. But at least it clears out the inventory, if you will, of all that BS paper that was written back then. So, I mean, that's not my opinion. That's not even science. That's just basic, simple, math. Oh, do you? Nice. All right. I was just, and Brickle's nice. My buddy was just looking at, what the heck is the name of that building? The reddish, it's got like a reddish, darn it, I can't think of it now. Anyway, it's right there. We were looking at it. He was when we were down there at the Keys. Anyway, I got to wrap it up. I think my time's up. But so be safe this week. I'm used to Mondays. Next week, we're still really in the summer doldrums. You have a week and a half ago, I guess now, or a week ago, whatever it is. You had Draghi do his ceremonial jawboning of the market. But of course, that only gets us so far, and you've already seen the market kind of start to make a run to test his words. We'll see. I won't be surprised next week if there is a further test of the resolve of the ECB, because rarely does the market allow jawboning to go untested like that. It's pretty unusual if it does. It would be the black swan, not the norm. So anyway, we'll see how that goes. But anyway, so risk remains high is the bottom line because of that, that kind of two-sided resolve, because you have a lot of risk on the other side. If and when they do intervene, then you could have an explosive move the other way. But would I get in a trade based on the expectation that they're going to intervene? Not on your life. Not even in a freaking paper trading account would I do that. And maybe it will work, but that has no bearing. I simply wouldn't do it. But should we buy the euro? Yeah, again, I would be very cautious right now. You got a lot of risk on both sides. You got downside risk of the market itself wanting to test his resolve, and then if and when he does push the button, the flip and rip the other way for 300 to 500 points, which it almost surely will be, is, not something you really want to be part of. I know everybody thinks they want to be part of until they are. You get on the wrong side of that for 2 minutes, and yeah, see you later. Thanks for playing. So, what do they say? Confucius say best way to win a fight is no be there, something, right? If you know that there's a high probability of an accident happening at an intersection at a specific time, or even at a relative time, you would probably avoid that intersection, And it's the same thing. Right now, the euro represents a higher probability of an accident occurring on either side. It doesn't matter what side you're on. than it normally does. So that's all I'm saying. I'm not saying it won't work. I'm not saying you can't trade it or whatever. It's just you have to acknowledge that greater risk is involved no matter what you're doing. So for many people, the right solution in that equation is to step aside. I realize most won't, but that's why the market is so ripe. The next webinar is tomorrow. Oh, sorry, I'm so screwed up with with today. I never do webinars on Friday, so I'm all messed up. The next one I'm doing is Monday. Same time. No, not same time. Sorry. See, I'm totally screwed up. 10 o'clock Eastern Time, New York time, Monday. We can regroup. So anyway, thank you all for listening. Thank you, FX Street, for giving me the soapbox once again. Thank you for letting me spout my opinion. Sorry, I am saying that tongue in cheek, but okay. Anyway, be safe. If you don't know what your edge is, you don't have one. And if you don't have one, you definitely don't want to be trading with your own money. Somebody else's is fine, but not your own. All right, guys, have a great weekend.